Hello traders, Gary Wagner here. It is approximately 10:30 on the Pacific Coast. We are coming to you live from the Money Show in Las Vegas. It is Friday, the 18th day of November, and this is the daily report for gold and silver, our weekend review. Traders, you know, with the type of activity we have seen over the last couple of days, it is almost nice to see a quiet market today. We currently do have gold trading higher on the day today. It is currently up about $2 to $3. As you can see, current print 1722, 1723. We're looking at an ask bid spread. The interesting thing is we have sold off and sold off hard, but as you know, I am looking at two possibilities in terms of the various wave count. And just in the way that it has found support, and when I talk about support, what I'm really talking about is you can see these series of equal lows that we got between yesterday and today's trading activity. It is falling at a perfect Fibonacci number. We'll look at the Fib number in a second. But what that tells me is that the possibility of our A, B, and C, and then heading into our impulse phase, which would look something like 1, 2, 3, 4, and then a fifth, is still quite possible. If you recall from yesterday's report, I talked about that critical area right at 1700. We have managed to stay above that, and that bodes very, very well. And traders, I want to spend a moment discussing why 1700 is so very important. What I have done here is run a basic Fibonacci retracement starting from this low, the beginning of the what I call the July rally, which took the market from under 1500 to above 1900 per ounce. And when we look at that, the 50% retracement comes out to roughly the 1700 mark. You can see that it blew right through 38% and right through 23%. And realize, traders, this is the longer of the retracement sequences because we can also do one from this low to this high. As long as we maintain above this particular area, as I said, I think that there is a good probability that we are going to see third wave, this being the fourth, and then a final fifth wave up, meaning our impulse phase has begun and the correction has terminated. Now, traders, what I have done is simply added one more Fibonacci retracement sequence going from this low, 1538, up to this high. And you know that I speak about a system simply called Fibonacci harmonics. In Fibonacci harmonics, we are looking for two different time cycles to give us the same result. And you can see that we've got a very, very strong Fib harmonic right in the area of 1700, because not only is that a 50% retracement, but it is also a 38% retracement of this last rally from the low to the high. And so that bodes very, very well, because when you take a look at all of these different retracement areas, you don't really get any other harmonics. You get something right at 76, but they're not very close together. But these are literally on top of each other. It's an absolute critical number. Because of that, I feel as long as we can maintain ourselves above this area, we are probably still in a bullish impulse phase. It doesn't negate that theory. We're certainly not out of the woods yet, because this market, as we know, can easily turn on a dime, and when it does, it could move lower. But my line in the sand, so to speak, is 1700. Now, the other thing that I find interesting and something that we absolutely want to be on the lookout for is, you notice we have, first of all, this long black candle, and it appears as though, because the market isn't closed, we're forming this star in a morning position. And traders, You know that I always look for potential bottoms in the market when we get that Three River Morning Star. The Three River Morning Star would look something like this. After a defined downtrend, you've got the black candle, the star, and the red candle. Your confirming candle, of course, would be on the second day or second day of a rally. And we typically have seen this type of a formation at the bottom, major bottoms in the market. So the fact that we're forming a star right now, to me also bodes very well as a possibility of finding a bottom in this market after selling off. So it is something that I feel very, very strongly about, in that my belief is that we will look for the right opportunity once we have confirmation that we have in fact found our bottom and the market is moving back up. Now, the other market, of course, that we want to look at is going to be silver today. And silver is trading actually a little bit stronger than gold, as you can see, currently at 32.40. And the interesting thing is we've got a formation in this market that, as for a two-day pattern, is simply called a piercing line. It will be a piercing line if it actually can close at or above the midpoint of the prior black candle. And you can see that we're actually close to that midpoint. If it's not a piercing line, it's very, very close to a piercing line. And that's a very bullish indicator. The other thing that I like when I look at silver right now, you can see this really strong support that we're getting at $31. You can see this series of what we call matching lows, which are also called, in terms of a Japanese candlestick pattern, a tweezer's bottom. So I need to see confirmation on both the gold and the silver market. But I absolutely believe that the fundamentals in the market, even though we saw a reaction in a atypical way, meaning gold selling off $40, silver selling off hard, on a day when the fundamental new data that was coming out should have been very bullish for gold, but gold was following this mass liquidation of commodities and equities, and as I spoke about yesterday, the only sense I can make out of it is that people were pulling profits to cover their losses in other markets. But I am extremely bullish on these markets, and my sense is that until proven otherwise, I believe that we have a strong opportunity, that we have entered an impulse phase rather than still in a corrective phase. But traders, I have to look at the data as it comes in. And as we looked at it yesterday, there was a clear and distinct possibility that in fact we were still in a correction, because in fact we had not taken out a primary area, and specifically I'm talking about the gold, because it really, to me, was critical that gold maintain a certain level. Let me show you what I mean. And that we're back to the gold chart. And what I was really talking about is the fact that the marketplace itself needs to break above 18, call it 1825, right in this area. And that would be a 75% retracement of the move down, meaning from this 1902 down to the 1520. Typically on a B wave, you get between 50 and 75%. Above that tells us that we're in an impulse phase. Not being able to get above that and actually breaking below the 1700 tells me that we're probably still in a corrective phase. We're certainly not out of the woods yet, but today's activity, although quiet, bodes well for the precious metals bulls. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.